Welcome to the Wealth for Real YouTube channel. I'm your host, Christopher Anastasio. It's Tuesday morning, August 6th, 2024. I thought I would jump on a live here, guys. With everything going on, markets and stuff like that, things really kind of heating up. It just seems more apropos to do some more lives more frequently. I actually hope to make a habit out of doing them throughout the day as things kind of develop in this situation that really kind of, in my mind, kicked off on August 1st. Let me start by apologizing for first and foremost, guys, because yesterday I tried to go live around afternoon a couple of times. Reception failed me, YouTube failed me, maybe both failed me, but felt really bad because at one point it was actually 18 people joined the live, and for fucking nobody like me, guys, that was a lot of people who'd come on the live to hear what I had to say. So to every one of you that came on, whether you were on for a second or 2 seconds or 10 seconds, or you were there to troll me or to hear what I had to say, genuinely, I actually appreciate every single one of you for taking the time out of your day, the important things that you're doing, to jump on and listen to what I was going to talk about. So let me get that out of the way, that apology, that mea culpa about yesterday's live. Hopefully that's not a commonality for where I'm sort of located as far as AT&T reception goes and things like that. But anyway, what I wanted to say is, for this morning is, and again, nothing groundbreaking. I think making more of a habit out of checking in with you guys on just what I see when I turn on Bloomberg or look at the markets or check the stock ticker on my phone, and some of the rolling thoughts that I'm having about those developments, accounts that I follow, interesting things that people I respect and subscribe to, what they're saying about the situation, things like that. I want to just kind of share those things with you guys as they happen. So more than likely, I'm going to try and do them as live versus pre-recorded content. But anyway, so this morning, guys, the first thing I was going to share with you is just looking at some of the news for futures and what the market was going to do today after the 3 down days that we had, the significant down days, which, you know, I've gone on the record saying I am absolutely convinced at this point that we have reached the end of the bull run. The 16 years is over. This isn't like a 3-day pullback and then another blow up, you know, into the strategy. Yeah, sorry guys. So another connection issue there. I think, you know, probably in the future, guys, I'm only going to do the YouTube lives when I'm on a Wi-Fi connection. I've been using AT&T cellular the last couple days. But anyway, just reading about, you know, futures bouncing back up today, trying to calm nerves and say, well, you know, this isn't the beginning of the collapse of the U.S. economy and hence a global collapse enveloping that, but rather it was really more of this blowing off of the Japanese yen trade, which then sucked the life out of a lot of like the tech investments that are going on, like in the AI space and things like that. So it was really trying to couch it more as like a micro event versus a macro event. This article that I read this morning, which I think was on Reuters, if I remember correctly. And, you know, look, that could absolutely be the case. You know, I could definitely be proven wrong here. I have no insight beyond anything anybody else has. I just have this sneaky feeling that the time to pay the piper has finally arrived, that the things that people like Nassim Taleb have been saying, some of the other more obscure accounts on Twitter, you know, the guys you won't see on CNBC, the guys that you're not going to see on mainstream television, what they've been calling for, what they've been showing in terms of the borrowing, housing market, the weakness in the employment number, all these things that are sort of swirling through the U.S. and the global economy. The bill has to get paid. It's got to get paid at some point. And so that's what I think this really signifies these last 3 days. Now, one of the accounts that I've been following very closely since the 1st or the 2nd of August, and I forget the gentleman's name. I believe his last name is Sayed, S-A-Y-E-D. And apologies, however wrong I got that, because I just recently started paying attention to him. But he was touting the yen carry trade as the core sort of kickoff issue here that would lead to bigger and worse things. And apparently, I guess he's been saying it for a long time because he's been claiming a lot of vindication in his tweets and stuff. It's rather entertaining. So what he's been saying about like the carry trade and stuff like that it's just more the beginning than the end, is where I've kind of and I see, yeah, the plug, Japan interest rates are a sign to come. Yeah, I definitely think it's not where the story ends, it's where the story begins. And so, you know, the attempt to calm investor nerves by saying, well, it was just that big unwinding of that carry trade. It's, you know, it's not the U.S. broader economy. The economy is fairly strong still, all this stuff. I just don't buy it. I just, for some reason this time, I think we're caught in that wedge that people like, for example, Peter Schiff has been talking about for the longest time, that we would eventually reach a point where we would have a choice between raising interest rates to knock down inflation, or we would have to lower them to avoid a recession. But either way we went, we were screwed, right? Like if we had to raise them higher and higher and higher to defeat inflation, that would exacerbate and deepen and make more painful whatever coming recession we were going to have. But on the flip side, if we gave in to the easy money policies that we typically default to when a recession is oncoming or incoming, then we would exacerbate inflation, right? If we started cutting rates into that recession, we would now accelerate and provide that fuel, that accelerant to the fire for inflation. So that wedge, being caught between those two things, it feels like that moment is arriving, because all this talk about the Fed, like, you know, they should cut, they should do an emergency cut. But then people saying, well, wait a second, they haven't reached their 2% inflation target. If they start cutting all the store of value type assets, you know, the golds and the silvers and even the bitcoins, although I think it's questionable whether Bitcoin is a store of value yet. It's obviously too volatile to be a store of value. Maybe one day it will become that. But anyway, you know, so people are like, well, they can't cut into this because they're going to exacerbate all those inflation fears. And then you get the people on the other side saying they can't let a recession happen. They can't allow the economy to collapse. They should have cut sooner. You know, so that whole debate is really starting to flare up and present itself more than ever before. And then, you know, you pile in economic data like, you know, the fact they just haven't been able to squash inflation entirely. That's continued to persist. That, you know, you have the weakening employment numbers. You know, all these employment numbers are going to get revised downward. I mean, the 114,000 jobs that they reported on August 2nd, that's going to be revised downward. I mean, it's not going to be 114,000 in a month. It's going to be, you know, 100,000 or 80,000 or 90,000. So that weakening labor market, which typically that decline that we saw, supposedly, I read this somewhere, the amount of the decline going into August typically signifies a recession. It's like 0.8% decline or something like that. I could have that wrong, but it was something about that. You know, it basically was like, you know, when you see a decline like that, you basically end up with a recession. And so, you know, I don't know how, you know, reliable that is. I don't know if that's, I don't know. I'm breaking the law. Yeah, thanks, bro. You know, I don't know what that really means. I mean, there's a lot of data that's come in over the last year that, like, honestly didn't pan out to anything. It didn't turn out to be anything bad. So I don't know that I really would even rely on that number. But it is interesting that we breached it. So I think these are just some random thoughts, guys. I really have no fucking clue what I'm doing. I'm just kind of reacting to stuff. I think like the average person who's got their day job and their other responsibilities, but they're trying to keep an eye on this. Trying to keep an eye on it as closely as possible. I did one positive here that I typically wouldn't have done in my younger years is actually bought into the Bitcoin weakness yesterday. So when it had plummeted to like 49.50 and it was just starting to turn up, I think it had just touched 51, I bought more. And I think, you know, years ago I would have been like, I got to sell all my Bitcoin. I can't do it. You know, I can't hold it at this point. You know, I feel like, you know, that is a little bit of a turning the corner on saying like, okay, I got to buy into the weakness. I got to buy when people are selling. I got to do the Buffett thing, you know, buy when there's blood. I did move a few thousand, I'm sorry guys, connection issues per usual here. I did move a few $1,000s to the Fidelity account just to have something if things go, if things go south, over the next, I'm having connection issues. But anyway, so bottom line, guys, is I'm having connection issues. But anyway, so bottom line, guys, is you move the money in there just to know that I had some dry powder on hand if something really significant cropped up that I wanted to pounce on. I actually think I need to hold back. I need to wait it out a little bit. I need to see this thing start to really stair step down significantly to start buying in. Because if it is what I think it is, if it is fractally, to the nerd comment, if it is fractally like 2008, like we're going to see the same thing but in greater proportion here, or something in similar proportion, a 30, 40, 50, 60% drop in the indices and in people's portfolios, I want to be ready to buy into that weakness. I want to stair step into that weakness. But it was just important for me to say, rather than retreating from this bloodbath the last 3 days, I was going to move towards it. And when the last thing like this happened in 2008, I did the opposite. I panicked. I sold out of the whole thing. I remember just dumping everything in like the fall of 2008. And then I sat on the sidelines, and then it recovered in 09, and I missed the whole thing. So, so I think that was a symbolic win for me to move towards this weakness versus away from it. So anyway, guys, I'm going to be checking in, again, like I said, as frequently as possible, live where I can, mostly not driving, and let you guys know just what I'm going to try to do next, or what I think is about to happen, or just what I'm seeing from an enthusiast's standpoint, what I'm seeing from the accounts I follow, the people I respect, the people who are talking about this situation. If this thing reverses and goes back up, and we don't get the big collapse here, I don't know, maybe I'll be convinced it'll never, ever, ever collapse for the rest of all time. I mean, whatever, we have a 50-year fucking bull market or whatever. It's gotta collapse at some point. It feels like this is the moment. I'm kind of banking on that. I'm situating my mindset towards this is finally the tilting over of the markets and the economy as a whole. So thanks for watching, guys. Really appreciate everybody who commented, positive and negative comments. Appreciate them, guys. The fact that you took time out of your day to join me and make a comment is much, much appreciated. So anyway, yeah, try to go live again later today, guys, when the markets have been open for a while. Check in and see what's going on. So thanks for watching, guys, and thanks for supporting the channel. Thanks for, if you're a subscriber, thank you for subscribing. Thank you for commenting. Thank you for your questions, and definitely thank you for joining me today. All right, guys.